Hi guys, welcome to Saving Money Show with me, your host Sean. Trying this on a new phone with a new camera and microphone. Let me know what you think. Is it better, worse, or same? Right, this is done all on the fly because I haven't set many things up. But anyway, we're going to get into it. Sun Pacific Holding Corp. Now, this is a company that it's a high float, but they're doing industrial sized bus stops with solar panels on it and charging ports and advertising halts on them. Now, they have a number of different things, but this is the one I like because a lot of the stuff is built in America, and imagine if they start getting a contract, it's very cheap. But you know, it's one of these, I wouldn't go all in. It's a bit sketchy, but you never know. It could always skyrocket. Now, we all know about GME. Remember, the reason they're opening it up so you can sell is because they want you to sell. It's nothing but market manipulation. So let's look at, if you want to short some stocks, let's look at some shorts with some good financials. You've got Tangier Factory Outlet Centres. It gives a good dividend. It's got a good value compared to earlier in the year. We all know the reason why. And if we have a quick look at it, you know, the assets outweigh the liabilities. So that's always good to know. And these three stocks I'm talking about now will have a short interest of between 50 to 75%. So that is the reason I'm talking about them. And we have BGS, B&G Foods. Now, I've had a friend of mine who's good at due diligence look into this, and he has said it's a good company. They end up with 14 million left over from profit after paying everything off. Now, their current assets 661 million, total assets 3.2 million, current liabilities 216 million, total liabilities 2.4 million. Now, you can see is value compared to earlier in the year. P ratio of 18, so they're making a profit. It says here 4.63%, but I think it's more like 6% dividend. But again, you have to make your own decision. And the first PLCE, Children's Play. Now this one has gone digital because it was false too, and you'll find that let's check. Yeah, sorry. Yeah, there we go. The current assets don't outweigh the current liabilities, but the total assets outweigh total liabilities. And as I said, it's all about your risk level. This is a riskier one than the previous two, but at the same time, I think it's one that you might want to look into. And we're going to have some. Hi guys, why not hit that lovely like button and comment in the box below? It really does help with the YouTube algorithm and getting the video out to more people. While you're at it, why not hit that red subscribe button if you haven't already. And have a look at smashing that bell notification. You'll be notified when I upload a new video. Now, if you're looking for free trading platform on which to trade your stocks and shares, why not check out the links in the description below? You get a free share worth up to £200 for signing up and depositing a small amount. There's links for Stake, Trading 212 and Freetrade. There's also links to other freebies, as well as videos you may have missed, and my Trading 212 pies, which I rebalance regularly, so why not check them out. Right. The first one is going to be Bioventix PLC. Now, it has no debt. It's had huge growth, and year on year its growth has been above 40%, and I think you need to kind of check this. It's a UK stock. It won't take long before they check these out and realise that it is. You see here, it's got next to no debt on it. 778,000 total liabilities. Current assets 11.9 million. It has actually wiped off that debt on its books, which was just accounts payable and deferred tax liabilities. It has no debt on its books. It's had huge growth year on year, and it's sheep monoclonal antibodies for diagnostics applications such as clinical blood testing. Now, that has done incredibly well this year, and we are waiting on this year's reports, but before last year it has done amazingly. I suggest you look into it. Now we are going for a company I've spoken about before, 17. Now it's another company that's done incredibly well. Of course, it's in the gaming industry, and you can see here 16 million total liabilities, current assets 53 million. No debt on the books again. They have huge growth and they're growing all the time, and I just think, and it's another UK company, I just think it's one that is huge. One I spoke about before. Sorry about Sumo Logic. Now, it's one again with no debt. I do like companies with no debt. It means that if they get into trouble, they can always borrow money and it's not going to affect them so much. Now, all this debt, deferred revenues, which are just services they haven't provided, or accounts payable, or, and that's all it is. 125 million against 471 million current assets. Now, it's recently bought a golf game, which if you go and put Team 17 into Google, you'll have loads of news articles about that. Anyway, let me know if this new format was better for you, if you can hear better, if you can see better. I'll see you in the next video. That's all for now. Stay safe, stay savvy, stay investing.